Man, oh man, what a fantastic day. Hope you guys made some money out there today. Boy, one of those days where don't we just love being a trader on a day like today? Tons of incredible reversals. Man, oh man, if we get half as many setups tomorrow, I'll be a very happy camper. But it's back to work tonight. It's back to work. It's Thursday evening already. We're getting ready for Friday's trading session. And man, oh man, do we have a lot to cover in a very important video. Lots of big moves on the charts this afternoon. Some more big news coming tomorrow. You know me, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Friday. Before we jump in and get this party going tonight, got a lot of great trades we'll talk about tonight. Before we get started though, make sure you subscribe to our channel, hit that bell icon so you always get notified when we publish something new. And if you guys enjoy the video tonight, do me a favor as always, hit that like button, give me a shout out in the comment section. Thank you guys so much. I got a lot of love this week on the YouTube channel, so I always appreciate you guys tuning in and supporting these videos. But enough of the intro, we got more big news tomorrow. We had some really big moves to finish up the day today, and man, oh man, what a fantastic day. It's been a fantastic last few weeks here. Now, we're only as good as our next trading day. So where are the best trades here for tomorrow? Everything pretty bullish right now, right? S&P is bullish. NASDAQ is bullish. Oil is a little bit bullish. The S&P and NASDAQ, though, very interesting chart tonight. The bulls have all of this momentum as we rotate off the low. But you know where we are, right? We're back around the highs of this trading range. I would expect these bears to come in and try to run this thing going lower, and I think we've got some really nice bear traps waiting down here for another leg higher. I definitely have plenty of bear traps on shallow pullbacks, on deep pullbacks, so I really like the bear traps. I've got some eyes on some breakouts going higher, and you know there are bears waiting up top there, so we definitely have potential for some big reversals, just like we saw this morning and this afternoon. So there are so many ways to make money on the S&P and NASDAQ tonight. We're going to cover all of them here on this video. Oil, as I said earlier, oil is kind of bullish right now. We're running into some pretty significant resistance. We have a beautiful rotation off the low right now, so I definitely do have some breakouts on my radar for tomorrow, but I definitely be keeping an eye out for some bull traps above the highs, some bear traps as we go lower. So I got a bunch of good trades we'll talk about on the crude oil. S&P's ready, NASDAQ's ready, oil is ready. Glad to see you are ready here as well. Friday, tomorrow, one of the biggest news, the biggest news report of the week is tomorrow morning, the personal income number at 8:30 Eastern time. Now, Fridays are all about early in, right? Getting into positions early in the morning, and hopefully that personal income number will give us a nice catalyst to get us into something early in the day. Markets tend to float on Friday afternoon, so my goal on a Friday is always to get into positions early and then try to leave those runners as we go later on in the day. The big news tomorrow is that personal income number at 8:30 Eastern time. We got new home sales also at 10 o'clock Eastern time. Definitely not as big as the PCE number at 8:30, and we'll hear from Loretta Mester at 10:15, right? So the game plan tomorrow, get in early, leave those runners. We'll give you guys a good game plan, right, to get into some good trades early tomorrow and leave some runners. But keep an eye on that 8:30 news. That's the big news for tomorrow. Back to our charts though, guys. If you like making money, you definitely want to watch this video all the way through to the end, because I'm going to cover all my favorite trades on the S&P, the NASDAQ, and the crude oil. And remember, every trade I talk about tonight will be applicable or can apply to your favorite market. What I talk about on the S&P will definitely apply to the NASDAQ. We cover on the oil, can apply to both of them. So don't just bail on me after your favorite chart is over, because I'm going to give you guys reason to stick around all the way to the end. Let's jump right in first. S&P first, NASDAQ second, and we'll wrap things up here on the mighty oil tonight. Couple things first here, guys. Don't forget, this is a 10,000 tick chart. These are all tick charts here tonight. This is the 21 EMA, the exponential moving average. And you know how we roll. I always like to include a couple additional kind of higher time frames down the description of the video tonight. I've got some 60-minute charts, some 4-hour charts. So if you want to see more of the bigger picture, kind of the lens at which I'm looking at these charts tonight, a great companion for this video tonight are the links, again, the 60-minute and the 4-hour charts down in the description of this video. So now you know where to get more information. But real quick, what's the most important factor right now on the S&P or the SPY? Really, there are 3 key factors that are kind of tipping me off to where the best trades are going to be for tomorrow. The first one is this range. We popped up, went into a range, we head faked off the high, ran lower, and now we're rotating off the low, as we call this. Now, we talk about these a lot on these videos. Whenever we have kind of a bullish, relatively bullish, right? Bullish move into a range, and we rotate off the low, that's a lot of momentum, and a lot of times that momentum will carry us now all the way through to the highs up here for sure, and potentially all the way up into that pendulum swing up around 40, 55, 40, 60 area as we go. So it's no surprise, right? The buyers have a lot of momentum as we push higher. That's one of the factors on my radar for tomorrow. The second piece of the puzzle for tomorrow is this triangle. Now, we've been making hay, right, going back and forth on this triangle pretty much all week this week. This triangle, of course, been very, very good to finding turning points, and this is nothing new. We've been talking about these triangles pretty much all week. Well, now you'll notice we're starting to get pretty wide, right? This triangle now becomes pretty wide, and eventually what happens is when these triangles become so wide like this, the momentum begins to build, and oftentimes the simple sheer momentum now for the buyers will oftentimes going to push this thing through the top of that triangle. That is another key factor, right? The triangle is getting old, it's getting wider, momentum begins to swing more back and forth. Again, gives a lot more momentum, a lot more credibility here to the buyers. The final thing that I want to mention, the third piece of the puzzle, is you'll notice every time we've made a new high, sold back down, new low, bought back up, new high, sold back down, new low, bought back up. Where are we right now? We're in the middle of this range, and we have to think now that there's probably going to be a lot of bears who are probably going to see this triangle, and they're going to go, okay, time to short this thing, and they might be successful. But it looks like the rest of the bears, all the big bears, are probably waiting up overhead. So this might give us, the buyers, of course, a chance to punch this thing going higher until we really have to worry about more bears showing up above those big highs at 40.34. So that's what's on my mind right now. A lot of momentum as we rotate off the low. It appears we have some more space to go before we really have to deal with some serious bears here. Now, we're overall bearish, right? Again, this is not a bull market overall. You'll see tonight that 60-minute time frame in the description, you'll see we're still a pretty bear market, so I can't go being too aggressive on the buy side. That's why I mentioned earlier my favorite trade for tomorrow or my favorite trades for tomorrow are going to be bear traps. So let's talk about how we can use the sellers almost against themselves, right? Anticipating now as we try to go lower, again, think about bear traps. And we talk a lot about this in our free trading course, for example, right? So as we go lower, think about now all the bears now trying to short this thing, right? And finish off that rotation. But again, we haven't taken out that high yet. One of my favorite trades here is to rope in those bears just below this prior swing, rope those bears in, get them trying a couple times, and then look for a bear trap running higher, right? This would be a trap pattern or a two-try failure pattern, just like we talk about in the free trading course. Another one of them, I would not be surprised at all if we did get a stronger shot down, right? Stronger shot down, because again, it's overall bearish, but again, still looking for that rotation going higher here. Trap those bears in, let them try once, let them try twice. I'd love to get that little trap low below that low, and then think about where all those stops are, right? Think about where their stops are. Remember, bears coming in to the shore, but we think these are the smaller bears, right? The baby bears, the cubs, right? The big bear, mama bear, right? Dad bear, they're hanging out way up top above these highs here. We love to rope in some of those sellers here and get that punch back up. Now, you'll notice as we go lower, it's very difficult to want to be a seller down here, because now we find ourselves right back down around the lows of that trading range. So if we do end up all the way back at that low, we're looking for the same stuff. Once again, those bear traps, right? Looking for those bears coming in. And again, we're overall bearish. So trying to let them try a couple times, using their stops, right? Their pain as fuel and looking for that run going higher. I would imagine at the big low like this, if we do make it all the way back down to that low, I would imagine there's two possible scenarios here. One, like we saw here, which is basically bears once, bears twice, stop run, and the run back higher. I would definitely imagine that is one very viable option. We may also, of course, end up pulling back, retesting that low. Very, very common whenever we see a strong move down. They retest the low, and then we start getting, for example, we talk about these a lot in the free trading course where we have the bears trying once, bears trying twice. Once we have their stops in mind, right, we buy into those stop losses. And remember, though, oftentimes these things will pop right back up. You'll get yourself a new channel coming in off that high, right? Mark off the high, mark off that low. This would be a really kind of a buyer's dream come true tomorrow. We'll see if we can get that deep pullback though, right? So again, running lower, bear traps off the low, trying to go back up into this trading range, trap them in, let them try twice, because again, it is an overall bear market. Use those two try failure patterns, those crown reversal patterns you guys learn in the free trading course. And then as always, once it begins to push higher here, sometimes, right? Sometimes it does this. Sometimes it just rips back up, which, who complains about that? Everybody loves that, right? But if it does kind of pop up and pull back, keep an eye out for a bear trap off that low, a seller failure below the moving average, a pullback combination, definitely a strength move. These are all the same patterns you guys are learning in the free trading course, right? Which reminds me, by the way, I know that most of you guys and gals are either taking the free courses right now or you've taken the free class. You've learned all these entry tactics. But listen, if you're here for the first time today, if you're one of the few folks who haven't taken that free course and learned all the bear traps, the failures, how to use stops as fuel for winning trades, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course. I'll tell you, the strategy that I teach in that free class will teach you a remarkably simple trick. Within the first few minutes every day, you'll know exactly where the best winning trades are going to be that day. And I'll show you 4 different of my favorite entry patterns to help kickstart you making money each day. So definitely grab that link. If you're not getting the results you want out of your trading, if you're missing too many good trades right now, definitely grab that link, take the free course. It is perfect for someone trying to make the jump into full-time trading. And we'll talk a lot about bear traps, right? Trapping in the bears, using their stops as fuel. So as we go lower, I would love to trap those bears in. Now, I'm sure one question would be, could we sell this thing as it goes lower, right? What if this thing just takes off and begins to run as we go lower here? The only way you can safely be a short seller as we go down is to basically sell traps off the top of a channel. That's the only way you can safely do it here. It's not my favorite trade for tomorrow because you will be selling relatively low at support in an overall range market. But that's the only kind of conceivable way you can be a seller here as we go lower, right? So if we do pop down, the bears hold that pullback and they start to jump going lower like this. Be very, very careful shorting this thing as it goes lower. Your best bet to short will be finding some sort of channel as we draw off the lows like this, pin it up around that high, and be looking for those, in this case, bull traps, right? Getting above those prior swings to grab that. This is the only safe way to do it as we go lower, and then be very much aware of where you are, because this is where, of course, 1, 2, those failures, those bear traps, right, coming in to buy it right back up again. So again, right, as you can see, lots of trap opportunities as we go lower. Now, I want to talk about as we go higher, right? Because this is definitely something we need to keep on our radar for tomorrow as well, right? I mean, like I said, we may easily end up punching either back to these highs or through these highs as well. So let's talk about that now on the NASDAQ. Got a pretty good game plan as we pull back to, again, trap in those bears and use those stops as fuel. Over on the NASDAQ, nothing different. right? Nothing different. We have a trading range on the chart. We are rotating off the low. That gives a lot of bullish momentum, right? Momentum at the back of the buyers. As you can see here right now, the triangle or the megaphone pattern, you could say here, is getting pretty old. It's getting pretty wide. And again, the wider it gets, the older it gets, the more likely we are for one of these to punch and break out. Might be this one we're watching right now. And then again, the big thing in a range market, we know that above all the highs, right? Above all the highs, below all the lows are where all the big lot traders, the people who actually move these markets, are waiting. And boy, oh boy, does that put a big bullseye right on that high, right? Like I mentioned earlier, right? We assume that sellers are probably going to try to short off this high. But again, it's the baby bears, right? It's the little cubs, right? We assume the big scary bears are waiting up top here. So we definitely have that same kind of situation where as we go lower, trapping in those bears, right? Trapping in those bears and trying to punch up back to retest the high. All right, as we go higher, if we go higher here, what do you think is the best way to buy it, and how would you sell it as we go higher? Well, first of all, where do we think the market wants to go? Remember, we have this what we call a pendulum swing. The amount we go below the range is the amount we go above the range, right? So we know we get the high right here, and we know we have that pendulum swing overhead. If the buyers really get this party cooking for tomorrow, it'll try to take out that prior week close. That's last Friday's close. And if you were with me on Tuesday, Monday was a holiday, you may recall that we have something called a snapback. Whenever Monday is a holiday, oftentimes we end up aggressively going back to the prior week close. Now, we never got that. We never got that this week, right? The market pretty much fell apart on Tuesday. So if you're a student of mine in the trade room, we talked about this on Tuesday. That could be a big objective, that prior week close. The S&P has the same thing. The S&P's prior week close. Where is that? Okay, it's obviously way higher up on the S&P, right? So probably not going to be too reachable on the S&P, but I would definitely imagine though, right, again, that pendulum swing inside this trading range, this would definitely be where the buyers, if they can really get this thing ripping, that's where they're going to want to go, right? They're going to want to go right back into that. Now, again, I'll believe that when I see it, right? I'll believe that when I see it. We're still an overall bear market. Back to the chart though on the NASDAQ. As we go higher, if we go higher, the two things you want to think about right now to be a buyer, we'll cover the buy side, and you know we're going to cover the sell side. Now, as we go higher here, because we know we have to expect more of the bigger bears waiting up here, the way that you want to look at this is you want to look for shallow traps on the way higher, right? So basically trap entries on the way higher. Once we take out some of these pendulum swings, then you want to start thinking about that deeper pullback, find that bigger channel, and trap in some of the bears below the moving average. Okay, so this is the scenario you want to have on your radar as a buyer for tomorrow. Okay, there's two components to it. Again, we have a lot of momentum as it rips off, as it rotates off of that low. If we get a good punch and we go through these highs, the way you make money going higher is you buy those shallow traps. Okay, shallow traps. Again, it's a trap setup, just so you guys learn in the free trading course. But then again, as we start getting higher and higher, we have to expect more of those bigger bears coming in. They're going to try to knock this thing back. As they knock it back, then we look for this point now are the inexperienced bears, right? They're selling short too low. We expect now these levels to hold. We expect these prior resistance to become support. And I really like that deeper pullback, get underneath the 21 moving average. Again, talking about bear traps. Again, trap those bears in below the moving average into support, channel support, prior high support. That is a really, really nice trade there because, again, at that point now, it's all that bull momentum. And anytime we see a strong breakout like that, we're looking for what? A retest of that high. So the key to making money, if we can get this thing to kind of keep on jumping higher here, is shallow pullback traps, right? So on the way up, and then once we start getting up around these pendulum swings, once we start getting pretty high up, you want to think, okay, we should be expecting those big bears to come in. They knock it off the high. But unless they can knock it and hold this thing, there's a good chance we can trap in some bears below that moving average. And of course, if you're taking my free trading course right now, this would be a failure pattern, a pullback combination, and we're trying to go back and retest the high. Okay, so keep that in mind for the buy side as we go. Now, how do we short this thing, right? How do we short this thing off the high? There are probably 3 different ways we can short this thing off the high. You ready? 1, we make our break higher. Right, but now we don't get that deep pullback now. Now the buyers come in, they try to buy it once, they pull it back, they try to buy it twice. First way to do it is a crown reversal, right? Crown reversal. Okay, these are 2 try failures. Okay, 2 try failure. Basically, buyers try once, they go lower, they try to buy it again, they try twice, and they trap high. We saw one of these, right? We saw one of these. It's not as obvious, so I'm drawing it right now. We pop up, see how they pull back, they try once, they pull back, they try twice. See how they get right above those highs like that, right? That is a crown reversal. Notice also how they mark off that trend line, they find that channel, and what do? Hit that first test. Okay, how many times this week did we talk about that sequence? All right, if you watch the videos this week, we talked a lot about that. And we're going to talk about it again here in a moment. Okay, so the first one is a crown reversal. Remember, at this point, it's very bullish in the short term, but again, long-term bearish, which is why we can even consider being a seller in this situation. So we run up. The buyers come in, they try to keep it going. But again, as we go way up like this, you don't want to chase it. It's an overall bear market. We have to expect bears are waiting, right? The big scary bears are waiting up top here. Let those buyers try once, pull it back, let them try twice. There's your crown reversal. You want that 2 try. You want that trap up there, right? That's the way you pick a top in an overall kind of bullish move like this, okay? The next way to do it is one of my favorites as well, is a double top. Right? So now let's imagine now we do get that strong breakout. We do pull back. The buyers do get that retest of that high now. And now the rookies come in. They're buying too high. They're trying once. They're trying twice. We love these double top reversals, right? Double bottom, double top reversals. Trap in those buyers. Again, use their stop. Remember, think about this. At this point, very, very bullish. But again, overall, right, overall bearish is why you can even consider this short. Once those buyers are trapped, now we have their stops, right? Those stops, that's fuel, right? That is fuel for fuel. That's the worst spelling of fuel, right? Yeah, you know, F-U-L-E, right? No, the fuel, right, we need to run back down. Luckily, this is not an English tutoring channel here, right? The fuel we need going back lower here. Anyways, the next step is like I mentioned over here, right? Once we get that retest, we trap in those buyers. Don't forget, as we get these things to roll over, this is where you start looking for those new channels off the low, up off that high, and again, grab those, as we always say, grab those first tests off the high of that channel. This could be a bull trap like I'm showing right here. It could be a buyer failure. It could be a pullback combination right off of that high, right? And again, you can see a very good example of this back here, right? We run up, buyers once, buyers twice, that beautiful trap, they roll over, grab that low, grab that high, and then again, don't miss that first test right off the high of that channel. It's basically a buyer failure. You're trapping in the buyers right off the high, and then as it rolls over, you're simply hitting it off the high of that channel and dumping it back down. So keep an eye on that as we go up higher, right? As we go up higher here. The final one, of course, is the V-top, right? The third one here is the V-top. So, for example, if let's say we do get that strong pop up, we get some, right? We get some bear traps on the way higher, but then once we're waiting for that deeper pullback now, right? Now what happens is it comes in and just gets clobbered, right? We may not get that signal that we want, right? We may not get that bear trap off of that, you know what I mean? We may not get it. You know, that's the reality of a big bear market. Okay, we may not get that. I would expect we'll get the bear traps right here, right, on the way higher. But again, we may not get that deep pullback to fail and pop back up again. It may just get ripped and tank. If that happens, right? If it simply pops and begins to grind down now, you know what's going on. You know we're heading back into that big range again. Okay, they're going to want to go back to the side of that range, believe it or not. And at that point, we're going to mark off that low. We're going to mark off that high, right? And we'll go looking left and find some of these prior swings and then grab that short off that, as we always say, the first test, right, of that channel high. And again, I love traps. So I always go out and look for those swing highs. Right, I go out, look for those little swing highs like that, right, and then look for the entry. Usually it's right above a prior swing like that, right up top of that channel. And of course, the moving average will come down, right? You'll be just a little bit above the moving average for buyer failures. So traps, failures. And again, right, I'm not going to go into all the entry patterns right now, but you'll learn those entry techniques inside that free trading course, like I mentioned earlier. All right, guys. So I like a lot of these setups right now. So again, on the Nasdaq and the S&P, we go lower, focus on trapping those bears in for that move higher, right? As we go higher here, think about those shallow pullback traps, right? Think about as we make that move way up, right? Now we start thinking about bigger channels, deep pullbacks, trapping in the bears. Again, think about using some of these prior levels as key support. And again, I'm just simply scribbling right now, right? But these are failure patterns, pullback combinations. You guys will learn more of those entries in the video course, right? If we run up and you start seeing this 1, 2, right? That's your crown reversal, right? If we run up, we retest the high. 1, 2, that's your double top reversal. And remember, once they double top, once those buyers are roped in, we oftentimes will get that drop. And that big drop, we can oftentimes grab that new channel, okay, and hit them from there. Okay, that also goes for the S&P as well, right? So S&P also has all of these same patterns on our radar here. I think I've covered everything. The only kind of other variable would be, what if we go sideways here? What if we get stuck inside this trading range? If we get stuck inside this trading range, really nothing changes. It's really even better at that point for the bear traps below. So if we start going sideways, because of course we have the PCE number tomorrow, the personal income number at 8:30. So if we start going sideways, same thing, right? They're going to try to run this thing back to that low, but that range becomes a magnet, and it's very difficult to want to short something when it goes below a range, when you have the bigger range lows right there. This is a horrible place to be a short seller. Right? So it's a great place to trap in some of the unexpected sellers, the rookie bears, right? The baby bears, as I keep saying, 1, 2, right? And then back up into that range, using those stops as fuel. Right? And again, we may shoot lower, same thing. So don't be surprised. If we get another big, roller coaster run tomorrow, breaking out, right? Same game plan, right? Same game plan. All right, guys, I really, this stuff gets me excited for tomorrow. And again, remember, tomorrow, Friday morning, get into stuff early, right? In early, not necessarily out early, but try to leave a little piece of the position open on a Friday, because oftentimes the Fridays they love to run. Last but not least here, over on the messy crude oil, we are hearing more updates out of Ukraine right now. There's been a bunch of buildup from what I'm seeing off the news wires right now, a big troop buildup on one of the big bordering points between Russia and Ukraine, and it's kind of, as you can see here, getting oil a bit bullish here right now. Obviously, oil right now, our biggest challenge on oil is the Ukraine war. The invasion of Ukraine. We're very much data dependent and news based right now, so it is causing some very inconsistent price action. But we're doing our best with it, though. What's the most important factor here right now? On the oil, we are an overall bear market right now on the 60-minute time frame. If you watched last night's video, we talked about this kind of perfect pullback that we're still kind of waiting for right now, right? That's one big part of this. We have that key level of resistance up around that 76.25. If you were here earlier this week, you know how well these kind of what I call perfect pullbacks or symmetrical or measured pullbacks oftentimes work. And this is a very good candidate for it right now on the oil. oil. So in an overall bear market with a perfect pullback area at 76 and a quarter, we have to assume there's a lot of bears waiting above that high, right, to short this thing back down to that low. That's where the bearishness ends, though. You can see right now we're pretty bullish into a trading range, and we now are, well, we're rotating off of the low. Right? There's definitely is some breakout potential for these buyers. This is, well, it's definitely not the same as the S&P and the Nasdaq. The rotational aspect is the same, right? But remember the S&P and the S&P and Nasdaq are bearish markets into trading ranges, okay? And we're rotating off the low of the bear market, right? That's why you have to take the bears seriously up there on the S&P and the Nasdaq, right? It's a bear market into a trading range. So we can't be that aggressive buying it as it breaks out, right? This is very different. This is a bullish, again, short term. This is a bullish move into a range. This gives a hell of a lot more potential for the buyers to push this thing back higher just because of the sheer amount of momentum going into that trading range. So those are the biggest factors on this chart right now. So going higher here, we have a lot of bearishness on the chart, a lot of bears waiting overhead, but a lot of bullish momentum in the short term. So if we do pop up, if the buyers can hold a pullback and jump through that high, now we have this market now probably racing for a retest of that 77.80 area, 74 area, right? That big high up there. I would imagine there'll be two possible breakouts for the bulls to keep in mind for tomorrow. One would be a pop and grind going higher, which is very common whenever there's a range above you. If the bears give up on this thing, it may pop and begin to grind going higher. If that's the case, we'll mark off that high, we'll mark off that low, right? And start looking for bear traps for the entries off the low of that channel. I say bear trap. I love traps. You guys know that in my trade room. But this could be a trap setup like this example. It could be a failure. We could get underneath the 21 moving average, the bears come in, they try to short it, right? And again, when it pops and grinds like that, we're probably going to keep going higher here, trap those bears in and use that failure pattern into pullback combination as we go. Targets are definitely up around that 77.80 area, or we take out that symmetrical pullback high, we pull back to that 21 moving average, we jump off the moving average. We call these 1, 2, 3 breakouts, 1, 2, 3 breakouts. I mark the high, I mark the low, and we don't miss that first test, right? We find one of the entry patterns right off the low of that channel. Again, target is pretty much the exact same location, right? So kind of keep that on your radar as we're going higher. How would I short this thing? This is the tough part. This is definitely the tough part because, again, we have that bullish momentum, kind of at the back of the bulls here right now. So as we go higher, what you have to do is look to use that bullish momentum against the buyers. This is where you look for bull traps. And in this particular situation, because of this trend line that we have coming up, you want to look for one of those crown reversals, right? And what I mean by that is you want to let those buyers try to force this thing going higher and try to use a trap entry. That'll be the best way to short this thing as we go higher, right? As we try to go higher, right? Anticipating now those buyers are going to try to force this thing going higher. But again, they're walking right into what is definitely going to be an area of resistance. Now, again, if they hold that pullback and go, now we know it's a breakout, right? And now we trade that first pullback. I'm not buying this pullback right here. Okay, we know that's resistance at this point, at least for now, right? So once those buyers get trapped in a couple times, then we can start thinking, okay, their stops are down here, and now if I can get in high enough, that's the key here. I want to get in nice and high. I want to sell. Believe it or not, the best shorts you'll ever take, you'll actually be selling as the market's going higher. I know it sounds scary, but that's where you get the best entries. And the better the entry is, the more likely you're going to get out with a profit. Even if that thing comes back and tries to punch higher again, you're still making your money on that trade because you're getting in nice and high. Right? That crown reversal is definitely an option I'm looking for. And then, like I always say, if it rolls over, right? If it rolls over and starts going lower, then you can start looking for that new channel off that low, off the high, and then now we kind of know where the market wants to go, right? It wants to take out these big lows here, and so now we can look for, again, crown reversal off the high, two try failure there with a trap high for the entry, and then again, grab that first test off the high of that channel. Not easy, right? Not easy, but not that difficult either. The key is simply waiting for the pattern. As we go lower, right? As we go lower, boy, I'll tell you, going lower, we talked about how difficult it is on the S&P and the Nasdaq to sell down here. It is very difficult for the oil to want to short down here. Why? Because the range above us, and there's just not much space. There's not much meat left in the bone, right? So if we go lower, the only real way you can short this thing is you have to get some sort of bull trap, right? You've got to get something above a prior high because, again, you're going to want to sell as high as you possibly can, basically because of that low being so close. And oftentimes these things will come off little channels like this. The channel's not required, but it definitely helps. So as we go lower, you basically want to sell bull traps, right, like I've mentioned here, right, as we go lower. And then you have to think, if we do take out that low now, this really sets us up now, because if you go back, if you go in the description, you'll see the 60-minute chart. There is a hell of a lot of support. Yeah, right here. As I say, this whole area down here is just a very difficult to want to be a short seller. So if we do take out that low, I like the double bottom reversal off the low, right? Strong move down for the bears. If we make our way back to that low, I do like that idea of trapping in like we saw right here, right? They go lower, 1, 2, trap them in. We go lower again, a lot of support. You'll see what I mean on that in the higher time frames down in the description of the video, right? So get those bear. Remember, we're an overall bear market right now, so you can't just buy that low. I mean, you can if you want to, but it's a very risky trade because sometimes they keep on going. I'm not a big fan of just blindly buying or selling, right? What I'd rather do is I'd rather wait and see the reaction. I'd rather wait and see if I can get some of these bears to come in here, because then if I can get those bears to kind of, dig their own grave, if you will, right? Wrap that noose around your neck, whatever metaphor you want to use for that. Then we have a catalyst, right? Then we have some fuel, right? So anyways, right? Some fuel off of that low. That was a bad joke, right? Some fuel off that low, and now with that catalyst, they'll stop to get run. You make a little bit less money doing it that way, right? Obviously, you make more money by picking the perfect bottom, but come on, right? Get realistic. Picking perfect tops and bottoms is very, very difficult. I would rather trade that perfect entry for a much more reliable trade, waiting for the bears to get trapped in, let them show us what they want to do, and then buy into those stops from there, right? So remember, it's all about trapping those, in this case, the bears in. And then you're at support, so just let those rookies let them rope themselves into that and then punch it right back up again. All right, guys? That's the game plan. That's the game plan for tomorrow here, right? So very difficult in this low. Be very careful selling into that low tomorrow, and you'll see why I say that in the description of the video tonight. All right, guys, excellent plan for tomorrow. Bear traps, breakouts, right? We got a lot of exciting stuff on our radar for tomorrow. I'll tell you, I'm very excited now to see how tomorrow goes, because the buyers are being given a very big opportunity to rip this thing higher, but it's been so bearish all week this week. So I'm definitely curious what's going to happen here. I'm sure you guys are as well. All right, the game plan is ready for tomorrow. Hope you learned a bunch. Hope you use it to make a bunch tomorrow. Don't forget, the game plan's ready. Tomorrow we get together and we trade this stuff tomorrow morning in the trade room. The plan is ready. Now we're going to trade our plan tomorrow. I'll put all the membership links, all the free course links, everything you need to join the free classes, to get all the higher time frame charts. They'll all be in the description of the YouTube video. If you need any help along the way, if you got any questions, please don't be afraid to call the office. The easiest way to get help with anything we talked about tonight is to pick up the phone, call, shoot us an email, jump on live chat. We're always here to help. Guys, my name is Joseph. Thanks for being here. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.